My name is John Rowland, Barchart's Head of Trading Education. Welcome back to another episode of Rowland's Trading Roundup, where you can better learn about the features and tools that Barchart has to offer. If you're new here, hit the subscribe button to get alerted anytime we upload a new video. Before we jump in, please take a moment to pause the video and read this important disclaimer in full. Any decision to buy, sell, hold, or trade any investment involves risk and are best made on the advice of a qualified financial professional. I don't have to tell you how difficult the start of this new year has been for us investors. If we look at our sectors, all but one has been down so far, year to date. And really, there's really been no place to hide. And maybe if you feel as I do, that the energy sector might already been overcrowded, or you might be already overweight. So what is an investor to do? Now, they say that there's always a bull market somewhere. So if you've been watching any of these financial channels, behind that constant white noise that we hear from them on a day-to-day basis, I've been hearing emerging markets. So what I did was I decided that with a little bit of help with Barchart, I'm going to do some investigation. So what I did was I went into our ETFs by asset class, and I'm going to start just filtering out. I'm going to go to geographic, and that's going to take me to emerging markets. Now, if you're not familiar with emerging markets, there are different types of emerging markets, but one of the ones that are more common, or maybe that you might be familiar with, are called the BRICS. That stands for Brazil, Russia, India, and China. And if I looked at these emerging markets, I just want to kind of just look at them in terms of a chart basis. I'm just eyeballing them. You know, none of them are really inspiring me. For instance, here's the Indian one. Here's the Nifty 50. Again, another Indian one. There's the Russian one. Again, maybe because of what's going on with Russia, it's not really inspiring me. But if I went back to, let's say, the broader emerging markets, I'm looking at a much larger basket. Again, I'm just kind of just eyeballing the charts. What I see is a lot of the same thing. I see a lot of these emerging markets have been in a dominant downtrend. Maybe they are starting to bottom. Still a downtrend. And a lot of them are starting to show characteristics like this bottoming action. But that bottoming action has kind of been range bound. But as I did a little bit more investigation, I did find a few that are starting to inspire me or encouraging me that maybe there is something out there. So what I did was I went back to our ETF screener, and I just wanted to kind of just make some simple hurdles for some of these emerging markets to have to jump over. So first I started with the sectors. Again, I went to geographic and emerging markets. Then, just two simple hurdles. First, I want to just see those that have been above their 52-week low. Not a big jump off their 52-week low, or maybe, let's say, a 6-month low outside of, let's say, 5%. I just want to see them off of their lows. And a very simple technical analysis. Relative strength, a momentum indicator. Again, I'm going to set the bar kind of low. I just want to see positive 20-day momentum. In other words, I want to see that RSI above 50. And I looked at that results. Now, inside of here now, we see a lot of different types of ETFs. And so what I did was then from here, I just went back again through the charts and looked at those charts that looked good to me. Or also what I did was I started to eliminate from the BRICS, Russia, India, and China. And also I eliminated those highly leveraged ETFs, the ultras or the 3 times. And I created a watch list with the ones that were left. And here's what I got. I got about 20 of these ETFs. Now notice the first one, the tops of our list, is the Brazilian ETF, our B in our BRIC. Now, when I think about Brazil in terms of investing outside of the United States, Brazil is a high natural resource economy. They have gold, they have oil and gas reserves, and they're very rich in agricultural products. And many of these agricultural products are desired by the world economy: coffee, sugar, and soybeans. Brazil is the largest producer of soybeans. Did you know, according to government statistics, 2 agencies, the Energy Information Agency and the USDA, the Agriculture Department, that the demand for biofuels is going to double in the next 5 years, and that soybean oil accounts for 30% of that demand? So in my opinion, in the new green world environment, that soybeans are going to become the new crude oil. So there's a lot of encouragement, I think, in terms of investing outside of the United States in some of these ETFs. But let's look at some of the other ones. Mexico, Latin America, South America. Again, another country that is rich in natural resources. Do you know what else these countries have in common? All of their central banks are already way ahead of the curve in terms of trying to control inflation. They've already raised their interest rates. So that could be also another positive factor for some of these economies. But look at some of the other ones that are in here. High dividends. And, a healthy dividend is a sign of a healthy company, and something as an investor I'm very keen about. So I like the fact that I've seen countries that have growth potential based on the resources they have available to them, and also I'm seeing high dividend yields. So again, if I just go and eyeball these in terms of their charts, and this is a quick way we can do this, notice that a lot of these charts are exhibiting bull market tendencies. But charts aren't the only thing that we're going to look at. For instance, I can go to the fundamentals of these particular ETFs. And again, one of the things that encourages me is that look at some of the dividend yields of some of these ETFs. For instance, the Brazilian one, the dividend yield is almost 8%. But there's some other things in here that I think are important to look at. Something called beta. Now, you're not familiar with beta. Beta is how our ETF reacts or is correlated to the S&P. A beta of 1 means it moves in tandem with the S&P. And notice a lot of these have low betas, below 1. These stocks or these ETFs are not influenced by the US market. And that's a good thing if I want to be away from what's going on in the US. The other thing that I can see is that their PE ratios are very low. And that could be value in some of these ETFs. Now, the other thing is the performance. And I can look at performance through a chart, which is really nice. Here's a 5-day, but let's look at year to date from the beginning of the year. And notice that these 20 are all performing very well, a lot better than we're seeing in the performance of the sectors in the US stock market. Our Brazilian one is up almost 17%. Chile, another South American country that has a lot of natural resources, one of the largest lithium producers in the world. And our technicals. Remember that small hoop I asked them to jump through? A relative strength. Notice that all these have a nice positive relative strength. Not overbought, but certainly in the right direction. And the other thing that I like about a lot of these is not only are they off of their 52-week lows, but many of them are now at their 52-week highs. Another positive sign of a bull market. But every trader has his own rules of risk. Every trader has its own way to decide if this is something that they would be interested in investing in. So one of the rules that I have is I kind of like to look at moving averages. I think moving averages really tell a good story. If a market has a strong trend, then prices will tend to be above our moving averages. So I have a template that looks at 4 moving averages together: the 20-day, the 50-day, and the 100-day, and the 200-day. So this is kind of this little spaghetti model. Now, if I'm looking at the Brazilian ETF here, I see a lot of positive signs. First of the 20 has crossed over the 50 and the 100, and it is trending higher. It looks like the 100 and 50 are starting to turn to the upside. Another positive sign. But I do have one rule, and one rule that is a deal breaker. And that deal breaker for me is that I need to see my stock or my ETF above my 200-day. Now, unfortunately for this particular ETF, I can't, in my rules, buy it because it's not above its 200-day moving average. I believe that if you have a strong stock or a strong ETF, that it will maintain above the 200-day moving average. Now, what might encourage me on this one is if we came back up and tested this 200-day moving average, came back and held, let's say, the 20 or the 50, and then broke back out above, then that would be a really positive sign for me for this particular ETF. But not all of our ETFs in this watch list look like the Brazilian one. Here's the S&P Emerging Markets Low Volatility. And you can see this one is definitely above its 200-day moving average. Not only is it above the 200-day average, but both the 50 and the 100 and the 20 are above the 200-day moving average. Another sign of a healthy trend. Here's the Mexican. Similar scenario. Here's a Winsome Tree High Dividend Fund. Here we see that we are above the 200-day moving average, and our shorter and intermediates are just starting to cross that. Not only that, but we are flirting with our all-time 52-week high. Here's one that has broken above its 52-week high. So there's a lot of different of these ETFs that are exhibiting bull tendencies and make them look attractive for an investment opportunity. So when we come up with an investment idea, every trader needs to do their own homework. And at Barchart can help us to shorten that work to allow us to do our due diligence. The process still needs to be done. And that one of the things that we can do in the case of our emerging markets is we can look at technical information. We can look at performance. And we can just look at the charts and decide which one of these fits our risk profile. I hope this video was informative. If you enjoyed today's content, make sure you subscribe to our channel and give this video a thumbs up. Until next time, the good of all trading.